Yeah, I'm sorry, there was a small connection disruption here. So we are talking about the poor structure. The poor structure here, all are short-term players, and it's just a short covering rally. That is why there is an AB poor low on the February contract, right? So whereas in the January contract there is no
Sir,
such thing. So
10,920 is 25th
the yesterday structure,
reference.
we got a multi-day breakout as well. It was a late multi-day breakout. It was late multi-day. It took 3-day high. It took
Sir.
3-day high here.
Hello, sir.
And you can see, we also talked
Sir,
about
able to hear me?
Stuff.
Hello.
When the price break out of the range, yesterday we talking about the range.
Rajendran? Hello.
So the hourly sentiment is kind of getting an extreme. So it's more or less getting into an extreme zone. So maybe time-wise, it might hit some extreme points. And let me also pull up one more interesting stuff there.
Hello, sir. Hello.
Yeah, I'm sorry. I was in mute, so I'm not able to hear it. Can you repeat the question again?
Sir, in Nifty chart, 10,920. You put the reference, right?
10,920. Yeah.
You put the reference. So that is 25th, right? Which date, sir, it is, this reference? 25th. I think data is not refreshed. I am not getting 10,920 single that reference here.
Yes, that you are using continuous contract. I'm using non-continuous contract. That's what I said clearly that I'm using a different contract here. All the data what I'm using here is a February contract. Whereas yours is 25th January is a January contract. What I'm showing here is this is a February contract.
Yes, sir. It's a continuation. I am getting TPO chart from last what is that 3 months. It's a continuation chart, right, sir? Yeah. I'm getting January also, February also. Whatever you are getting.
Yes, exactly. My point is that there are two kinds of contracts are there. One is continuous contracts, which is nothing but in January month you will get January contract. Once the January expiry is over, February contract will be automatically stitched to the January contract, right?
Right, sir.
That is the contract you are using. Okay. Whatever I am showing here is only February month contract. So 25th Jan also it is February contract.
Got it. Catch you.
26th January also is February contract. So it's
sir, how to do that, sir? February contract. Only February contract.
So only February contract, you can always, you have to select which data feed you are using.
Sir, true data.
Then you have to go check with your vendor. So your vendor will help you out how to get the February month contract.
Okay, sir. Thank you.
Right, so anyways, most of the authentic data vendors, they support both continuous contract as well as February contracts. So whereas in case of an AMI broker, it will be something like this. Let me show you. Like so, Nifty-I.NFO. This is a continuous contract. Right, always the old contract will be stitched with the current month contract. Whereas if I say like Nifty 18 Feb future.NFO, this will they'll bring only February month contract only. Right, so you will be getting data only for February month contract.
In future, once monthly contract expires, we have to see only the current month, data. So we should not see previous.
No, it is not like that. So I'm just experimenting with one more data feed. So I just want to check what is happening in the February month contract before the budget starts. I'm just checking. You can trade both the cases. Right. The only thing is that you will be having a different reference level. But sometimes during the start of the contract, we might miss some crucial informations.
Okay.
Right. So you can go with the continuous contract. Last month we can completely trade continuous month contract, right? So it doesn't matter. It doesn't affect much. probably 1 or 2 days, starting of the month, 1 or 2 days, we might miss some information, but overall, again, things will start narrowing down.
Okay, sir. Excellent.
So this is February contract, completely February contract. Yesterday also it is February contract. Right from the start of the series, it is just only February contract. Everything is February contract. So that is what I kept over here. This is the one which I'm using here is the global data feed. So far it's a drive. If at all price is coming into the previous day's range, it could be, if you look into the February month contract, it looks like a gap up. Is it a gap up? It shows like a gap up here.
Yes, it is a gap up.
Is it a gap up? But
yeah.
Here I'm not getting a gap up here. Here it shows like 860 levels. 893, 895. It's the same price, but why I'm getting something different information here?
37 points gap up.
It's an EV4 high as well. Yesterday high itself is 10,844. Okay, maybe this is, I'm just doing wrong here. So maybe I'll close and reopen, because when I'm trying to bring, it's against to showing me contract only. So it's not a gap up actually. This is also again showing continuous contract only, because I'm trying to use a mix of both February contract and Nifty continuous futures. That is why it is getting disturbed. Maybe I'll do one thing. I'll exit global data feed. It is not a gap up in terms of February contract. I'll show you. I can show you only by adding a new database. Let's say like I'm gonna go to new database. Enough web. Create 75,000. 915. Okay. So this is what I'm adding is only Nifty February contract.
Any calls for the day?
So a lot of background noise is getting generated, so I muted. So if you ask a question, just mute yourself back. Okay, so now what we will be seeing is only Nifty February contract. Okay, leave it. Nothing much to show. There is no gap up in February month contract. Maybe if you are using a continuous contract, it may looks like a gap up, but in February series, there is no gap up at all. But still, it's an AB poor high as well. So it's just auction is still continuing on the upper side. I think 11 o'clock, the budget is about to start. See, positionally, things are not favorable. That is, that's a very clear stand, right? So, and one of the reference here is 10,920 is the monitoring reference. On the upper side, we had a back-to-back secure high sometime back. And 11,000 levels, the option writing is still happening. So 11,000. So calls.in/OY. So 11,000 call option is still writing is happening there, and on the downside put option is happening. So all these data information has to be revised by end of the day, right? So if you look into the PCR will be somewhere around 0.45. Still, it's holding around 0.45. So maybe intraday level, in a worst case, 11,000 can be whipsawed, and then we could come back into the range. The day is going to be very volatile, and the India VIX is down around 16.47. Last 5 trading sessions, it is just going down.
Sir, in that graph, you're selling option writing is happening, no?
Yeah, option writing is happening.
In how you are saying, sir? What? Just wanted to understand this graph, sir.
So this is open interest. What is an open interest?
It's a difference between buyers and sellers.
No. Open interest is the total number of contracts which are open. One contract is one put call buyer and one put buyer. So one contract is, if you are seeing on the call side, there are how many contracts are there? There are 27 lakh 90,450 contracts are there.
Right, sir.
So each and every contract is initiated by one buyer and one seller. So that many contracts are still lying in the system. So equally, buyers are also there, sellers are also there. But why people are building more open interest in that particular strike price is that they are expecting the option writers are expecting that 27,900 will not go up. Most of the time, option market favors option writers. Most of the 90% of the options expire worthless, right? It expires at 0. So those are the places wherever you're seeing a highest open interest, it is most likely dominated by the option writers. And yes, on the equally, speculators also speculating there, but most of the time speculator loses the game 90% of the time, right? So that is why we say like it is it's a zone where it is completely, currently it is dominated by the option writers. But yes, all these informations are very dynamic, and we are at the start of the series. All these information could change. Since the event is there, it is always good to look on a EOD basis, right? So if you look on a EOD basis, 11,000, maybe the higher open interest which built it today, it may not be there. So that is the only reason it is always good to look these information on EOD basis to understand where the most of the option writers are positioned themselves, right? They will position themselves, of course, they will position wherever they are getting the liquidity, right? So, and they will try to defend their positions. Otherwise, they'll be in a very huge losses. Very, very rarely, when there is an event, they may go for a task, like something like a demonetization, or sometime the events like Brexit. So those are the zones you might get. You might get the option writers might take a hit. Otherwise, it's an 80 to 90% of the time they're gonna win the game wherever they are writing, especially in indices, right? And at the same time, let me also bring out this information, the participation OI. Just give me a second. Yeah. So what you're seeing is the participation open interest of clients. Clients are nothing but retail clients like us, HNIs, or ultra HNIs, or even corporate trading desk, or even family offices, right? So, or the one who is running PMS, everything comes under the category of the clients. So what you're seeing is the client index futures. So in the client index futures, you'll come to know how many of the clients are positioned as in a bullish mode, how many of them are positioned themselves in a bearish mode. That's what you will be come to know about here. So what you can see here is the client is so far they are maintaining a bullish stance throughout the entire 2018, whereas markets went overall sideways. Market went overall sideways, and so far they have more bullish positions in the markets compared to the shorts. The bullish positions are nothing but the orange color lines, and the green color lines are nothing but the short positions. The blue one is the Nifty. So the blue line is, which tracks the Nifty movement, and the orange tracks the total number of index longs held by the retail clients. Retail clients are the clients in general. So they are holding a bullish stance, whereas the FIs are the one who trades exactly against them. So far, they are holding a bearish stance, and no matter whatever the market conditions are, they tend to hold a bearish view in the markets for the last couple of months. You can see right from September onwards, they are overall holding a bearish view, and so far they are still having more short positions than the long positions. They always tend to trade against the clients because they are the two dominant players when it comes to index futures. 40% of the trading activity is 40 to 44% of the index futures. Overall market cap is controlled by the retail clients, and 38%, totally 36 to 38% of the total index futures is dominated by the FIIs. So usually the clients and the FIIs, they tend to trade against each other. They come and supply liquidity against each other. You can see the client contracts is somewhere around 250 levels. Currently 250 levels is the position, so they are the holder. Held on for the last series. And around similarly, some 220 contracts is almost held by the clients. So they usually tend to trade against each other. If client is having more long positions, then equal amount of short positions will be, almost equal amount of shorts will be held on by the FIs. So if the client is going long, this guy goes short. If the client is going short, this guy goes long, no matter whatever the market conditions are. And the most interesting part is the client index options. And you can see that the purple lines are the one which indicates option index put chart. It's nothing but the put writing, where most of the clients are prone to write puts. 60% of the market cap of the puts are written by the retail clients, right? So such a huge domination there. And wherever they are writing their puts, they are so intelligent in writing the puts. Very rarely they go for a toss when there is an event-based market crash is coming in. Rest other month in a calm markets are markets like 2017, markets like 2018. Most of the times they own the game, except during the February crash and October-November crash, right? Otherwise, most of the time they're going to win. Most of the time, where the put writing is happening, that really matters, right? So you can see right from the start of the series, they'll be ramping up puts options. They write more put option than anything else, right? So and the second thing is the FII's index options. What is more interesting is that FIIs buy all those puts. Whatever the puts sold by the clients, the puts are selling the clients. The clients are selling the puts. I'm sorry. Whereas most of the puts are bought by the FIIs. FIIs use put buying as a hedge to their index longs. So you see that no matter whatever the market conditions are, the green lines are the index put options. They're going long in put option every month. Every damn month they are going longs in put options, no matter what are the market conditions are. Let it be a bull market or a bear market. Maybe they might be using as a portfolio hedge, right? Or they might be having some index future position, so they might be having some index hedges, or they might be doing some sort of an arbitrage on index options, like index put options. So nobody really knows what kind of trading strategies they are using on index option, but most likely most of the put options are cheaper put options. They might be used as a hedge to their either to their portfolio or to their index future hedges, right? So maybe they might be involved in some sort of an arbitrage. So what is happening here is that they are trying to trade against each other. Even when it comes to put options, FIs are taking the long side and retails are taking the put side. Both are using as a win-win situation. Retails are thinking that most of the time, most of the put options expire worthless. Most of the time, markets are going to be bullish. That is the assumption, and yeah, they are right 75 to 80% of the time, and they are right most of the time. But when there are events which is coming, when there are unknown events which is coming in them, so the FIs are thinking that they are institutions, so they need some sort of protection. So they are taking put option as a protection. No matter what they buy put option, they keep on ramping up their put option. You can see as the expiry started, you'll be seeing that open interest keeps rising. That means more and more put options are being acquired by the FIs. Right? At the same case, if you look into the retail clients, as the series starts, they'll be ramping up their put option no matter what are the market conditions. In a bull market also they acquire, they will bear market also acquire, because they think that most of the time markets are mostly likely to be bullish. That is why you think about any option writers, they'll be mostly bullish most of the time, because they think that even a sharp crash come and then it could recover. That's what their assumptions are, and which is ideally not true. Very rarely market goes for a toss. So one more interesting thing is happening in the FI options, which I'm going to show you right now. Right. So usually FIs are very good in writing call options. Right. So in a bear market, they tend to write call options. Wherever they written a call options, market has been crashed or went sideways, and they protect. They used to protect on the upper side. So, but now something is happening. Lately, the call option, they're not so interested in writing call options. You can see that, which is not a good sign at all, right? So, which is where you can see that the call writing options last month start, it was at the it was at the extreme low. Even now, it is at the extreme low. That means last time we had seen over here, it's Jan month. Once the Jan month ends, they started writing call options. So if you are seeing this month, the FIs have started writing call option. More and more call option they are going to write. Higher possibilities that this could be the start of the clear downtrend, right? So they're really good at writing call options in a bear markets, whereas in a bull market they tend to stay away, or in a sideways market also at times they tend to stay away. But in a real bear markets, you wind seeing that open interest rises crazily well. So sometime over here on a demonetization, when there was a demonetization during 16th, you can see that they return an call option, the red color line, the call options. They returned really well, and throughout the entire bear market during 2015 to 2016, every month they return call option, and they've been successfully made really good money by writing call options over here. Now, since 2018, that call option writing interest has been very much declined. That means they are not so bullish at this point of time, but it's a dynamic information, right? So since it is at an all-time low, that shows that they are not really interested in writing call option for this currencies. But when the volatility started increasing, they might write call options, because premium will be bigger, and they can need a lot of premiums out there, and decent money can be made by writing call options. That I'm not suggesting that you have to write call options, right? But from their perspective, they are good writers, call writers in a clear bear markets. So in a clear markets, we are seeing that open interest is rising, and call open interest is getting much than the call buying open interest. Then that's a clear sign of that could be we are in a bear market scenarios, right? So as of now, there are no information that we are at the start of the series. So, but this information has to be monitored over there, because we are at the all-time low. There are all chances of ramping up their call options. So, but nothing much to talk about over here. Usually when it comes to client index futures, most of wherever the highest open interest is happening, they are most likely to go wrong there. So otherwise, there was a spike and there was a lot of single prints at B period. Price got back into the range. So here is the resistance level. So they hit the resistance level, and I want to call this as a low confidence buying. So that's the sign as of now. See, sometime back we had this, 19 December, we had this G2 high. And till today, it is an G2 high there. So till today, it is a G2 high. How about Bank Nifty? Bank Nifty is still trading inside the range. So it's still, and we can call that as a low confidence session. And this is also February contract. So we have a single print zones over here. That's going to be the critical resistance zone. So still they haven't crossed yet. Or maybe we can keep it over here. So since the price went down here, we'll take the bottom reference. And similarly, Nifty February also. I'm going to keep this reference like this. Usually like this. Okay, we'll close very close to the balance anyways. It doesn't matter. So that's going to be the resistance level here to watch out. Yesterday was a double distribution day, multi-distribution day, in fact. But as usual, 1, 2, 3, 4, total 4 anomalies. But at least Bank Nifty is so far looking good, not much of weakness. But Nifty is showing a lot of weakness there. When it comes to order flow, do we have any weaker reference level in the morning? There are not much of weaker reference level yet. So far things are fine. On the upside also things are so far fine.
Connection lost.
Yeah, sorry. See, we started doing ABC balancing here. Parallel, let's also do a top-down analysis here before getting into the session. Yeah. So let's do a top-down analysis here. So this is one of the reference level, 27,535, one of the resistance level when you can think about it. From the balance, this is one of the balance. The previous balance point of control could act like a resistance. That's what we are watching from the Harley time frame. And the daily chart. If you look into the daily, there was a reversal. The last 4 trading sessions, it was just one time framing, 1, 2, 1, 3, and 4. So some good confidence is there. And looking from the monthly, we got a quarterly reference level. So we already have this quarterly reference level here. The reference level over here, 27,700. It's going to act like a kind of a resistance for this. That's a bigger time frame. Any bullishness has to happen. 27,679 has to be accepted. Price has to stay above that. Then we can say like a fresh balance breakout is happening, right? So 27,679 on a higher time frame is still a crucial reference level because we are at the bigger balance here. So this balance I'm talking about here. Right. So this last month completely we traded down below that reference level. Every time price comes around 27,679, price got rejected multiple times, 3 times, 4 times in a row. And next comes the weekly. So weekly is kind of an building like a downtrend. You can see price is still getting down and down and down. Kind of it's building like a downtrend weekly. And daily is completely on the reversal side. So monthly it is sideways. Let me put it clearly here. So monthly it's just going balancing, and weekly it is trending down, and daily we are trending up. So completely mixed sentiment is there across the time frame. So looks like long time frame is not participating. Weekly, probably intermediate sellers are there, and daily it is trending up. That means probably short-term players are pushing the price up, and maybe whatever the short covering came yesterday, it could be just a simple short covering, may not be a serious buying yesterday. Still, the larger weekly started trending down. So weekly started trending down. So caution has to be taken care there. If at all any serious breakout has to come, so still the 27,679 price has to break up and then it has to sustain. Then there could be a change in perception. Otherwise, still the focus is going to be remain on the downside. And let's go and look into Nifty as well. Nifty, we'll start with monthly. Monthly is still in a balancing mode. It's in a larger balance. And if you go to weekly it is balancing horribly, right? So far it has been balancing like almost 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Almost 10 weeks, we are in a very tighter balance between 10,000, 11,000 levels and 10,500 levels. It's been trading is really difficult in this zone. So you would have been seeing that it's not that easy. They're not giving up 11,000 levels on the higher side, but they're not giving up on the lower side as well. So 10,500, 10,000, 11,000 levels. It's a ping pong game. They played multiple times. That shows that there is a lack of interest from the participant. Even on the daily time frame, it's still balancing. It's overall, if you look into that, even monthly and weekly, it's still balancing. And daily it is kind of trending up 1, 2, 3, and 4. Last 4 trading sessions it is one time trimming up. So this is Bank Nifty futures. Bank Nifty futures, and we'll also talk about Nifty futures. Nifty futures monthly is balancing, weekly is also balancing, and daily is trending up on one time framing, right? That's been clear. But there are weaker reference levels here. Yesterday's structure is a poor structure, and still the auction is continuing on the upper side. Still, there is no sign of reversal, to be frank. And immediately we are looking into the profile is the last thing we look into it. From profile perspective, we are seeing a resistance at 10,920 levels or so. and that's the first reference, first resistance. Nifty is about to hit, and there was a AB poor high on January contract, whereas if you look into the February contract, it is not there. So you don't need to take that reference level as a serious thing. It may clear or it may not clear. That was my that was my comment there. And if you look into the Bank Nifty is also nearing its resistance level. In fact, it has multiple resistance level. One of the resistance level got cleared yesterday, opening itself, and now we have two more resistance level coming in. So a lot of pressure is there on the Bank Nifty to keep moving on the upper side. And Nifty is also hitting the immediate resistance level there. So if at all anything you have to think about on the positive side, price has to start accepting about that, point of control has to start building about that. Then one can think about. But what I'm thinking here is, unless the budget is going to start, more activity is going to happen over here, right? So maybe you can also see some sort of an activity like this. This usually happens, or possibly there could be more activity happens, and lately price could also expect some any bad news. It could correct. So all sort of possibilities are possible. So that is why it's going to be making trading vulnerable. But it's really tough to play the game. So one of the day you have to stay away from the markets if you want to trade intraday. Right? So positionally, yes, there are opportunities to fade the AB power low move and also the G3 low and G2 low move. So on the downside, but the upside risk is unknown still. So that kind of territory we are in. So definitely one cannot take a directional intraday trade or directional positional trade also, because upside is still unknown. There still the auction is not ended on the upside, but somewhere I'm expecting it to end shortly, right? So somewhere I'm expecting to end max to max 11,000 plus levels in a worst case, and then but still that could be post that could be a potential corrections there. So 11,000 may come or may not come, but in a worst case, I'm saying that it could be 11,000 levels. But as of now, what is happening from the current market is that it's still the uptrend is continuing. We hit the first resistance. We hit the immediate resistance there. So can I take a shot here? If you're taking a shot here, you have to be aware of the consequences. We are on the event day, right? So we are on the event day. So on an event day, anything is possible. Market could go how much ever volatile swings can happen during budget hours. The day is not to look for trading opportunity. The day is we are going to check what kind of how difficult it is to trade an event day, right? So that is what we are going to look into. So again, we'll be having one more session around 1 o'clock to 2 o'clock, where we'll be discussing about how the markets are evolving in the post afternoon. So far, the point of control is started building around here, around the ABC level. So most likely, markets are likely to hang around until 12 o'clock or 1 o'clock. You could see a lot of volatility. Price could go up, but comes down. It comes to the point of control, or it goes down again, come back to the point of control. Maybe during market hours, if there are any announcements, still you might see some deep trend and then deep corrections, and then still you could be. It could go as crazy wild as possible. So that's what most of the event days are, right? So I believe that that's the same thing could happen today as well. That is why it's not recommended to take a directional opinion on event days. It's better to good one missed trading opportunity also, it is fine, but definitely looking into the surrounding conditions are much required before trying to initiate any trading uh, I mean, looking and initiating any such surrounding factors are very much required when you want to prepare to trade a budget day, right? So I'm going to stop here. We'll continue again by 1 o'clock. Nothing much was happening.
Sir, just a question, sir.
Yeah.
So like yesterday it was a single prints actually. In Nifty and Bank Nifty there was a single print. So
Yes, there are single prints.
so like is there in like even if we should see today also chart, there are the single prints in the Nifty.
Yes.
Yeah. So like can we expect it to go up again?
I don't know.
I know it's a event
What I'm
today.
saying is that there is an AB poor low is there. This has all the odds of coming in clearing. Probably I'm expecting this to get clear in 1 or 2 trading sessions.
Okay. So you mean to say like in coming the next week it may come down again.
Yeah, most likely.
Okay, sir.
Or
And
maybe
apart
today
from
itself.
this, sir, like last week,
Today it's
last 2 days back, like there was a high confidence in the ICICI Bank. Like there was five prominent five TPOs trading in the one key reference level.
okay.
So like, is there any what we say system like which will calculate then so say as like there are the five TPOs or more than five TPOs are trading on the same reference levels.
Hmm.
Is there any kind of alert, sir?
Nothing was there so far in Nifty.
Okay,
If you're asking from Nifty and Bank Nifty perspective, as of now, nothing was there.
okay, sir.
Right. So
Thank you, sir.
yeah. So just give me a second. I'll get my charger ready. Battery is running low. Yeah.
Sir, can we expect the same rally like it was there yesterday in the single pins in the same like it was B just moved, down just a single pins was there. Even today there are the single pins, sir. Even
Where?
in today's Nifty,
No, where is the single print? There is no single print.
can it's not a single pin, sir.
Where is the single print? There is no single prints. I mean, tails
Okay,
tails are single prints. That is fine. But there are no intermediate single prints. Like yesterday, we got a single prints around C period. Right? So somewhere here, in a February contract, we got at H period and I period. A lot of short covering happened. So I said, right, yes, whenever the price is traveling in this zone, whenever a price is traveling in the single print zone, the tail is a long tail. You see that? So those are low liquidity zones. When the price is traveling in these zones, it travels really faster and it clears most of the reference level. So whenever the price is breaking that level, yesterday my comment was like, if you looked into the Slack, my comment was, so this was my comment. So Bank Nifty traveling in a single print zones on 28th January. So could drive lot many short sellers out. So that means lot of short covering could come. That was my comment there, 11:26 a.m. So this is what happening yesterday. So you see that price started coming into this single print zones. A lot of single print zones over here, and it's a good confidence day. So for activity started building higher, value also building higher, and now price is traveling in an single print zones. When price is traveling in a single print zones, a lot of short covering could happen at times till end of the day. So that could be a potential target for you. That could be a potential target from an intraday perspective, right? So when price is moving with a high confidence, in that case, price has to move with a high confidence, right? So right from the morning, Bank Nifty confidence is higher, and price also cleared all these single print zones. The same case with Nifty as well. Nifty also cleared a similar single print zones. So those are the price also started getting back into this A period single print on 28th of January. Right, so prices started moving above the zone, so that is why I said like 10,820 is a possibility from an intraday perspective, because price started moving with a very high confidence there. So end up also moving and clearing most of the single print tail zones on 28 January. Short term odds of hitting 10,820 levels. That's what we talked about it yesterday. And also we yesterday looked into this balance, right? So the balance, the 5-minute balance, and we waited for the breakout. Breakout came. And we had an acceleration also. So we anticipated an acceleration, and acceleration also came. And I think a lot of background noise is getting generated. So once you ask the question, you just please mute yourself back. Okay, so my thing is that don't be so rigid about AB poor high at 10,960 levels. It may happen or may not happen. That is my thing here. So far the auction is up. We started balancing, ABC balancing. So more activity started happening over here. I'm telling again, trading events are going to be very risky. If you want to trade events, just better prepare for that, right? Don't try to take a directional opinion call over there, because it's most likely you cannot anticipate what could happen, because it's a binary event. All of a sudden there will be a good news coming in, and the next minute people will think that is bearish, and again people will think it is bullish. So you'll be seeing a lot of activity happening on both the sides, whereas end of the day you'll be seeing that price is getting balancing, and the more activity happens around the center. So more activity is happening around the center here so far. This is the equilibrium point as of now, and let's try to observe whether they are going to do a wild swings around this zone. That's what mostly happens most of the budget announcements. This kind of wild swings, price goes up and comes to the center. That swing can go up even 100 points also, 200 points also, right? This one swing can be even 100 points also, 200 points also. But most likely, if it is not a major expectation from the budget, we'll be seeing that end of the day, the range will be bigger. The range will be bigger, but we'll be seeing the more activity starts happening around the center. May know Sapna, please, the name with Sapna, can you please mute yourself? A lot of background noise is getting generated. Yeah, thank you. So crazy wild swings, that could be the possibility if there are no greater expectations from the budget. And we are also at the major swing high, 11,000 call rating is there. That is what it makes directional trading. It's very difficult there. But if you ask me, is it a good place to initiate positional short? Definitely it is, but not with futures. Definitely, if you are holding with futures, then you have to come up with some sort of an intraday hedges, right? So, or probably you have to add it in tranches if you want to. If you still want to short here, you can short some. Let's say you plan to take some 10 lots of Nifty. Then in that case, you can come with the 5 lots now, and some other 5 lots once the event is over. You can consider initiating a short. So you have to plan it wisely. Otherwise, buying here and selling there, it doesn't work. If you want to play that kind of game, if you think like budget is going to be bullish, budget is going to be bearish, don't try to play that kind of game. We are in a binary event. It's very risky, very dangerous. Most of the time, it results in serious damages. And that's the odd. So at what level one can expect a bearishness, if you ask me, and maybe we can think about weekly. So weekly, what happened there is it took almost a 4-week low, 1, 2, 3, 4. It went down, probably again going down again below 10,700 levels. That could be or maybe let's say price started going down below 10,750 levels. Another 100 points from there, it could be it could be a mostly a bearish view. That means price still there is a possibility of price again ending down below the previous week low, or 10,722 levels, which is most likely possible because it's an AB power low there. It's most likely possible there because there is an AB power low there. Price have all the odds of coming down below 10,722, right? So that is why I'm saying that there is a positional odds are there. There is all possibility that price could come back to the 722 level. That could bring a major trend change on the weekly. As of now, weekly is balancing, but this weekly could have all the possibilities of completely turning into a downtrend. That means positionally, it could be one of the plays again here to initiate and I'm not sure about intraday, but positionally, this is one of the good plays to initiate it. Trade for a very good risk reward ratio. Maybe it could on the downside, we could think about something like 10,200 or so, right? So that's 600 points correction here. But as of now, since the event is there, once the event is there, once the event is completed, we can quantify the risk, what kind of risk we can take. But since the event is not there, the risk cannot be, upside risk cannot be quantified, right? So it's really difficult to say. Nobody can say how a higher market could go up. They might do even a wild, crazy swings like that. They might even try to take 11,000 levels again, come back. It's kind of a look above the balance and fail, and then they even come back and clear this the downside reference also. So that kind of volatile swing may also happens. That keeps everyone on the edge of the seat. Anyways, we'll try to. As of now, it's just price is balancing. So far, if you ask confidence, it's high. This confidence can change anytime, or positionally, it's still weaker. Right? So, if you ask me how I will plan like I'll enter my half of my trade now, shorts, and later, if at all situations is getting favorable, or I'm still getting some more. Zones to a good zone to initiate. I'll initiate another 50% sometime later, maybe during middle of the day or during the second half of the session, right? So, or even once the budget is over around 3 o'clock or 3:30, we'll try to initiate the remainder half of the shots there, because we are totally unsure about what will happen during intraday, right? So I mostly like to position myself in the option front, not in the future side. Maybe future side, maybe tomorrow we can initiate a short if at all situations are still on the downside. It's still going and breaking 10,777. There we can think about initiating a future there, because it's the risk can be quantified there. As of now, the risk is not quantified, so one can go and play with options. Options are cheaper because the India VIX is at 16.77. One of the cheapest places to look for an options before the VIX shoots up. Right, so that's the game which I'm expecting right now, based on what the market situations we are facing here. Next, we'll again catch up around 1 o'clock. We'll try to discuss the development of how the structure is getting developed for the day, or how the is this a point of control which price is willing to build, or there are any crazy announcement which is going to break the day, or something crazy is going to happen to take this AB power low, is what we're going to discuss. Right. So I'm expecting this AB power low to get taken out maybe by max to max by Monday or Tuesday, so that we could be getting back to the downtrending days. So thinking about the value area, yes, definitely value area is building higher, but as I said, playing the value area is not an easy game of late. I mean, in a good trending market, it does, but we are not in a good trending market yet. But there are all the odds that this budget could be a trigger for the downside with the given scenarios, whatever the scenarios which we are talking about, the AB power low, the G3 low, and the G2 low on the downside. Right, so I'm stopping the session here, and we'll get back again by 1 o'clock sharply. So 1 to 2, we'll be discussing mostly about the market confidence there, and then we'll discuss about how the scenarios are getting played. I know that it's going to be a difficult game for everyone, because we are not the only one who is trying to figure out what to do. Every other trader is also trying to figure out the same thing. Everyone comes with some sort of levels, right? And that's what it's going to make the challenge. Market's going to be challenging. When less people are competing, it will be very easy. We'll be getting a trending move. When more and more people are competing, especially when there are events, there'll be mostly people competing on the upside also. There'll be people competing on the downside also. That is what price gets balanced, right? So it's kind of an on both the sides, the ropes are getting pulled. So the buyers pull it on the upside and sellers pull it on the downside. That is what it keeps the market in a balanced mode. Let's see who loses the game, right? Thank you.